Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Thursday. It is the 11th of April. For the most part, a pretty uneventful day in the market. You did see quite a bit of selling in the healthcare sector, showing more weakness finally coming out of that triangle we've been keeping an eye on these last couple of days. A nice little bounce over in the industrial sector here today. So that was nice to see, and a whole lot of, not a lot else. So as we continue just to kind of hang around, are we pulling back? Are we consolidating? Nobody wants to be the first person to make a decision, apparently, and understandably so. And good afternoon, Tanner. Great to see you. Hello, Fortino. Good to see you guys. As always, hope you had a very fantastic day, both in and out of the market. Finally have some earnings to look forward to tomorrow. We did have FAST that came out with earnings, this morning before the open. But now we're kind of getting into some names. We've got JP Morgan and Wells Fargo coming out here tomorrow. Those are pretty big names, right, in the financial sector. You also have PNC Financial and First Republic Bank reporting, both S&P 500 companies. So it kind of begins for some of the financials starting tomorrow. So it should be an interesting run. Actually, financials had a decent run. You saw some of the insurance companies trying to take out or challenge resistance today, as did the ETF. It didn't win, but it tried. And hey, everybody. Hey, Emily. Hey, Whitney. Good to see you. Good to see you, Marcelo. Hope you are doing well, my friend. Really, as you kind of think about the day, whoops, I didn't mean to hit that button. And whenever I hit the button on accident, it usually goes really slow. But hey, not today. So if you look at the heat map for the S&P, really dull, but you see an awful lot of red over in healthcare here today. Healthcare plans, once again, under some pressure. ABMD broke down below what I believe is a pretty significant support level. You had J&J threatening too. So still seeing some weakness, relatively speaking, over in the healthcare sector. Still an area that I think we probably need to be careful of, especially from a bullish perspective. Taking a quick peek at the S&P 500, I mean, really not a lot to see here. Just one of those days, up a little, down a little, closing pretty darn flat. So not a lot to see what's going on here. Apparently my computer figured if the market was going to be lazy today, it could be lazy today. It's always been something this week. I am due for a good not being attacked by technology. I don't know what it is, but now it's frozen. So I'll just talk for a minute and let it unfreeze, I guess. So hey, Scott, good to see you, my friend, and hope you're doing well. Hope you're doing better than the healthcare plans. I know you had a bear call going on Humana. I think you had it last week that you brought it up. And it's certainly not a great day for them. And goodness gracious, I am frozen completely on my screen, but I think I'm actually still talking. There we go. Well, I don't know what that was all about, but I think we could call it good computer. So one of these days, I'm going to have to get a better computer to stream on. I have my better computer where I have more secure things like trading accounts and video games. The finer things in life. And then I have this guy who is a little grumpy, real grumpy today. So, but really not a lot to see here on the S&P. We still are just kind of hanging around that, just shy of that 29. Of course, we've got some resistance a little bit above it, but it really looks like that's kind of what's working in to our resistance here in the short term, at least, on the S&P 500. So really not a whole lot new to report from a broad market perspective today, whether you think that's unfortunate or not. Good. I'm glad. I thought as I was typing, it hit a new 52-week low today, Scott. I was definitely thinking about your bear call on it. So I was, happy to hear that. Certainly wouldn't want to be the person who bought that from you. So pretty weak today, no doubt. NASDAQ, a little bit of selling here today, right at that 76 marker. I guess that makes sense from a number point of view. We know the story. We're pretty extended, but we're showing lots of bullish signals on pretty much anything other than very short-term time frames. Not a lot of resistance till our all-time highs, which, I think Noah summed it up nicely today in the halftime report. no one really wants to buy this close to all-time highs, but at the same time, the strength is there, and so none of us really want to sell either. And we're all kind of waiting for somebody to make the first move, from a broad market perspective, and not willing to do it. Hopefully, we see at least one more day of this. Hopefully, a nice boring Friday here tomorrow, and we'll close it out and kind of reset going into next week. And moving into the Dow, apparently I'm not moving into the Dow there. I'm moving into the Dow. A little more drift to the downside here today, but nothing really here to see that's any different than where we've been. Kind of dancing around on that old resistance level. I'm definitely calling it a zone around 26,000 for kind of where I'm looking. So really, a little more of a pullback in developing these last little bit in the Dow Jones. Not really a lot of upward movement here today, though, to get us going. And then lastly, over in the rut, doji day at resistance. Not much to see. We had that nice run, into resistance after an awful lot of selling the other day, working right back into that swing high. And at least as of today, not willing to break it. We've not taken that resistance out. Of course, 16 is kind of the big number I think a lot of traders are looking for. I'm actually looking to get a little higher than that, around 1605 personally, before I'm going to call it a break of that resistance. So not a lot to see here. If we do push through this resistance, I do believe that there's not a lot of reason to think we can't work and challenge that much stronger, in my mind at least, level of resistance at approximately 16. So we got to get through this one first. Maybe this is going to push us back down a little bit. We will have to see. So not a lot happening over in our indexes here today for the most part. Just pretty much what we've seen really most of this week, hanging around, a lot of indecision. Nobody really is ready to make a move one way or the other. We'll see if the end of the week can prompt them one way or another. And hey, thank you, Lloyd. Appreciate it. Yeah, I had to, you can't see it, but I have a big black spot from my barbecuer. I was out doing some barbecuing. The flames were coming up, so of course I took my hat off to put them out, and the hat did not come away unscathed, but the hamburgers did. And that was what was important. So the hamburgers didn't burn. The hat, yeah, it's got a little more character now. So big Utah fan for sure. Over in the materials, a little bit more drift. Seemed like it wanted to get going early today, but just with the type of day it was in the market, was just not a deep enough of a pullback, I guess, to really get investors all that excited that today needs to be the day to make it happen. Definitely liking this as a pullback as we're going into next week. Ideally, hey, it might, have a nice big run tomorrow, and that might be how it goes. Ideally, we have maybe one more drift down doji, or hang around doji like we had here today, kind of setting us up for some nice bullish retracements early next week. That would be preferable for me at least, and so I'll definitely be scouting through that for you guys here tomorrow as I'm getting ready for that scouting report. And I do expect that I'm going to have a handful that are interesting to me. I'm hoping that earnings don't get in the way. That is one thing that we do have to deal with as swing traders during this time of year, during these earnings seasons. If you're not willing to hold through earnings, you just have to accept there might not be enough time. You might have to pass, and you never like it, and you always complain about it, and you never really stop. At least I never really stop, but we do have to deal with it. So we'll see, but I do expect to find some interesting pullback opportunities in the material sector going into next week. So yeah, we're starting, Marcelo. I mean, it's basically, next week's not super heavy. It's heavier than we've seen for, since last earnings season, but it's here. I agree with Coach Mark that, when these big banks start dropping their earnings, it is earnings season. We're not in the thick of it yet. We got a little bit of time, but there's going to be a lot coming out in throughout the rest of the month for sure. Over in energy, kind of holding its own today, just kind of, I guess for me at least, making me feel comfortable that this is still a break. As you guys know, this is an area that I've been waiting for a breakout for what seems like a very long time. Every day that we're above that, sure, I would love to have it running. Who wouldn't? But every day that we're, holding up, I am satisfied that break is confirming itself a little bit. I continue to like the energy sector. And I'm continuing to use that 50-day moving average as kind of that first level of support. I want to give it a little bit of room. Just with the way it's been behaving, that gives us quite a bit of wiggle room before I say we're stuck back in a range again. So I expect it to continue to try to fight. It's really after that kind of break, that confirmation day, really we've just hung around the last 3 trading days testing that breakout point, which every day that passes, it's one more day for a trader to say, I'm sold, right? And maybe that's not what they're going to say, but I like to think of it that way. Every day that we can close above that resistance is a day that maybe I'm a little more open-minded to being a bull over in the energy sector. Financials were interesting. We did run all the way back up to that resistance here today, sold off of it on the intraday. Some of the insurance companies were leading the way, the AIGs and so forth, still shying away for the most part, largely due to the earnings that can impact this sector in the very near days to come. A break above this, I will absolutely call it a bullish signal. If we can take out this resistance level, I will call it a bullish signal. Don't know how interested I'll be with, in the short term with all these earnings, but hey, maybe we consolidate for a week and a half and then I love it, right? We'll see where that one goes. I also think it's probably reasonable to think, because still some of these things, and while many of the banks kind of turned it around, even some of the regional banks starting to kind of turn those bearish retracements into, yeah, maybe it's not that. I do believe that the lows that we set up yesterday and on, I guess was Tuesday, can be our kind of our short-term support level. A break below this, I do believe, could maybe get some traders thinking about, getting into some of those bearish looking stocks in the financial sector. So still not one of my favorite areas. I do think you have to respect the run up into resistance, the challenge of resistance. Obviously, we didn't break it, so not going to give it that much respect. But a push above that, I do think you have to call it a little bit of a bullish signal. And that would probably shy me away really completely from the, some of those, weaker looking areas. But I think, again, this is a lot kind of a stock pickers type of an area right now. You see some of those, financial stocks, they are looking okay. The insurance was really doing well earlier in the day, had a really nice break on AIG, not really something that probably all that easy to trade, pretty big move off of yesterday, 200-day moving average, not my cup of tea, but I really do like that pattern here. We are seeing some interesting buying opportunities, just like we're seeing some weakness in a few of the other areas. So let's see how this earnings season treats us. I expect to be a little on the cautious side on both sides of it, one way or the other, as we kind of work through some of these upcoming financial earnings, especially these big banks. They can certainly have an impact. Our big winner of the day was our good friends in the industrial sector. Of course, we saw them kind of work back down to that old resistance yesterday and form that hammer candlestick. Definitely traders were using it, at least for today, as an opportunity to jump right back in to the sector. We saw some nice movement over there, pretty much across the board in the industrial sector. We know the story. We've got a lot of resistance at 77, and depending on you, I know me, I'm definitely going to respect that as a pretty tough level to break. I do expect us to try to run towards that 77. Quite honestly, those are my expectations. I believe that today's price action off of yesterday's low is a good confirmation for that. We'll see where we're at 77. We've seen it cause us trouble time and time again. Maybe this time, though, it might look a lot more like a cup and handle, right? If we actually do work our way back up to 77, we'll have our cup here and then our handle here, little bit of momentum. So if we challenge 77, I expect us to have maybe a better chance of breaking it this time with the way that the pattern is developed than maybe I would any average day. We still have to get there. I think we can look at yesterday's low / the 50-day moving average / that 75 area of old resistance kind of as our primary support as we work into tomorrow and into next week. So nice movement over there today in the industrial sector. Tech, much like NASDAQ, finally a little bit of selling. Not much to say here. Maybe a little bit overextended, hitting all-time highs on the ETF, above all of the short-term moving averages. Strength continues to prevail. I think we all want to see a bullish retracement in the technology sector. I don't know that we're all going to get that, but it never hurts to ask, right? It never hurts to ask, pull back to this old resistance, pull back to the 9 EMA, for goodness sakes. We've been flying way above that for a while now. So I would like a pullback. We are extended. I think our eyes kind of naturally think that, but our brains might say, we have to come down, but we've been around, right? We know just because you're extended and I'm uncomfortable trading into you doesn't mean you have to be dropping tomorrow, right? Or at all. So I will continue to overall look at this from a bullish point of view. I think it's really hard to make a case against it with the price action that we've seen lately in the tech sector. But a little consolidation or maybe a pullback would really be nice. I think most of us would think that. Over in staples, kind of a doji type of day, did continue the overall momentum, putting in a higher high and a higher low, ending up pretty flat on a little bit of a doji, right shy of that swing level of resistance. I don't expect that to be a major level of resistance, but I will kind of keep an eye on it. Going into a Friday, we've had a really nice week of upward movement in the staples sector. I wouldn't really fault somebody for thinking at least about profit taking off of this pullback that we've had. And it's been a pretty well-behaved pullback too. Been a little easy on us for the most part this go round in the staples sector. So we'll break above this would definitely be another signal in my mind that there's more room for us to run. I do think in this 56.50 to 57 range, we got to be thinking profit protection, if nothing else. That is our all-time high. Certainly something that we'll be keeping an eye on if and when we approach that. And hey, Jimbo, good to see you, my friend. So just another decent day. It's not been a super fast mover, but a nice little grinder off of that recent retracement. Pretty well behaved. Then you have our friends in utilities, a nice bounce back day for the utilities from candlestick point of view. I don't think it means anything really, at least not to me. Still kind of stuck in the mud here. One way or another, it's not tempting people to buy it, at least right now. Now, I imagine at some point it's going to, whether we need to consolidate. And this is kind of what I wanted. We had our first pullback, and when we didn't get into it, when we didn't get triggers, when we both pulled back into that this was a couple Fridays ago, right? Didn't get the upward movement on the next Monday, kind of started to fall below those averages. I was kind of hoping it was going to go into a little bit of a sideways range. So I'm not going to complain about it. I still believe anything above 57 is showing relative strength. But I think right now we're kind of stuck in the mud, right? There's other areas we're holding up. No one really wants to sell, because how do you really want to sell the utility sector right now? But none of us really want to buy it either. And we're definitely stuck in a little bit of, rangy type of behavior. Not interested, probably won't be interested tomorrow. A little bit of a reset, maybe another week of this would be healthy for the utility sector. I don't mind this at all. I really don't. Have a hard time thinking it's a great environment for new swing trades, but that doesn't mean it's a bad environment. And honestly, above 57, I really have a hard time understanding any bearish sentiment. On the other side of things, I can understand some bearish sentiment in healthcare. They've been we've kind of been keeping an eye on that triangle these last few days. Broke through that here today, selling all the way into that 200 period moving average in this old support zone at around $90. That's pretty bearish. Now, we did see some buyers come in off of that 200. So there was all hope, I guess, is not lost. But I absolutely will call this a bearish signal. I will now expect this trend line to kind of act as our resistance level. So if we run back into it, and maybe that would be preferable for new trades across the board, at least within the sector, and maybe a little bit of a reset, I will expect that to be our resistance level. A break below the 200, a break below today's low. I could understand if someone were bearish, or even thinking about new trades bearish. Let me say that at that point in time, I would much rather see it kind of wiggle around a little bit before I get too excited. But I think as you look at this sector, we've kind of come around from being very indecisive on, some stocks look great, some look terrible. Scott can tell you all about Humana. You guys know about UNH and CI and CNC, ABMD breaking down out of a major level of support, at least in my mind here today. That's a pretty darn long level of support. We saw that, but you even see things like a Merck that has been showing such relative strength, struggling at its 50-day moving average. I don't know that I could say I'd be bearish on Merck just yet, but certainly not as bullish as I would have been in a different world. So I think you're starting to see a little bit more bearish behavior in healthcare than bullish behavior. There are still some things you've got, like with TMO. Is it TMO? Some of the medical device companies and the equipment companies, like Align here, have held up a little bit better than some of the manufacturers. Obviously, the healthcare plans, and so I'm not opposed. Am to be thinking about them. I certainly wouldn't be trying to guess the top. The signals, on something like an ALGN here certainly are not there, at least in my opinion right now from a bearish point of view. But all things being equal, I'd rather be elsewhere. If I were debating between two bullish trade setups and one was healthcare and one was industrial, or one was healthcare and one was discretionary, I had to pick one, the tiebreaker would go to something else. There's a little bit more bearish behavior in that area than I'd like right now. Not overly bearish, not to the point where I think you cannot, under any circumstances, want to be bullish on individual components within the sector. Like as you pointed out with ALGN there, some of the medical equipment and device type of companies have held up pretty nicely. It's a lot of the other areas and industries that are getting hit up right now within the sector. But my concern with the sector is really on either side. That's why I almost would rather see a retracement on the ETF and then a downward move. Is there's been a lot of volatility in this area as well, right? I know Scott was put to the test last week with that big upward swing on the 1-2 day punch on Humana. Didn't really change the longer term chart, but it definitely was some volatility that you probably could have lived without, right, Scott? Probably we're glad to see it go volatile the other way. So there's still a little more volatility in here than I would like. It's one of those things that I think we need a little bit of time before getting too excited, honestly. And again, you don't have to agree with me, and you guys know that I'm fairly wimpy about a lot of things, and so I certainly don't expect you to always be as wimpy as me, but still leaving it away. But I do think this has to be called a bearish signal, regardless of what I might want to be doing with the sector overall. So I think we continue to be careful with it, if nothing else, realizing that if we are playing bullish, there are some corners of that sector that can drag you down with them. Doesn't mean they necessarily will, but I think you have to say they can. So there you go. Yeah, well, the tank part was from my younger years. So when I was a much bolder person, it certainly did not translate over to trading. That's for sure. Over in discretionary, knocking on the door, holding up really well at a major level of resistance, not broken through just yet, still knocking. Still like what I'm seeing here, still very open to a break of 118, although ideally not tomorrow, or a little bit of a pullback going into next week, but still overall looking at this from a bullish point of view. I mean, the only real negative we can say right now is we've got a major level of resistance, and that is true. I don't want to diminish that, but beyond that, showing a ton of momentum above pretty much everything from a moving average perspective and from an old resistance levels perspective. So still, I think a lot to like overall within the discretionary sector. A break to the upside, absolutely a signal in my mind. A pullback would be okay by my standards too. Looks like, at least as we've kind of just think about how this week has transpired, just kind of hanging around. Some guy, some stocks will have a good run today and not do a whole lot tomorrow, but it always seems to be somebody, holding up the sector as a whole right now. And probably part of it is there's not been a ton of heavy selling in a lot of the different individual components within the sector. And then you have real estate that just, of course, doesn't like to live below the 90 MA these days. It tests it all the time now. And those of you who know Coach Mark know that, kind of from his studies, the more it tests, the more likely it is to eventually give out. But tell that to the real estate sector ETF is basically that thing has just been, I mean, it's hindsight. It's easy to say in hindsight, but just buy it at the 9 EMA on the intraday and collect your pennies and call it a day. And that's really been what's happened. You know, I've certainly not been doing that, but that's certainly the way it's been behaving. All-time highs. I mean, again, not really much to say here other than it's showing a lot of strength. You do think that at some point, maybe it would want to have a shallow pullback. But at this point, I mean, really, I think we could say it's consolidating, you know, versus, so maybe we don't even need a pullback anymore. You know, we haven't really went anywhere from a price action perspective over the last week or so. So maybe this is the consolidation. Again, these are REITs, so they, you know, don't have a long history of being the most volatile area in the market, right? And lastly, over communication services, just another day looking a lot like tech, right? Pushing up a little bit of a red candle, not a whole lot to see here. Same really as always, much like the tech sector and the discretionary sector, even though I'll be the first to admit I like both of those sectors more than communication services. It is very similar. You know, that is a me thing, you know, more than a chart thing, I guess, if you will. So not a whole lot has changed over in the communication services sector either. So we will, of course, be getting plenty of earnings, and do keep in mind that, you know, crazy things can happen, right? That big gap, that was the Facebook earnings, right? They can have some pretty wild impacts on this ETF, but really just seems like for the most part, you know, you had money coming out of healthcare. You did see more weakness in particular in those plans, but it is starting to work its way into some of the other industries within the healthcare sector. A little bit concerning from a bullish perspective. On the other side, really nice movement in the industrial sector. Pretty much everything else is just kind of another day, another day that ends in Y, kind of the story of this week in the market. So that's where we find ourselves after the day is done. From a sector point of view, over in the VIX, not a whole lot to see here, just kind of hanging around one way or the other. Dollar, nice little run up here today. Some folks, and again, I understand where they've been coming from. I just don't agree with it. You know, I understand where folks coming into this retracement, why they're looking to do that. But as you guys know, for me, it's still waiting for that break, you know, from a swing perspective, still waiting for the break of that resistance, still expect that to be very difficult. No matter what is happening, it has continued to be difficult for it to break. So I do expect that 90s, you know, anywhere really, can be anywhere from 97.50 to about 97.70 on the dollar index to act as some resistance. But from a, you know, short-term price appreciation, bouncing off of that rising 20-day moving average, little upward movement here today, a little more upward movement. The folks who have been trying to swing trade within this, and maybe they've been succeeding to do so as well, I could understand them willing to try to take a run at that resistance. For me, that resistance is way too heavy to try to mess around with, and I'll just continue to wait and see. Just like I'll continue to wait with the metals over in gold after, you know, kind of a nice 3-day run, basically all given back here today. A lot of selling over in the metals market. Sure, the dollar rallied, so that of course can have an impact there. But whatever the, you know, why ever happened, now we've got, you know, consecutive lower highs, ton of, you know, negativity on today's price action. Still don't think you do anything with it. You know, I'm certainly not looking to, unless we break that 1280. I'll continue to let other people, you know, deal with the back and forth in here if they want to do so, at least from a swing trading perspective. Not a great environment in my mind. Still a little choppier, but definitely showing some weakness here right now. Now, what I think we can say with the way that we've developed our downward trend line here, and again, this is going to have to be take a little bit of time for me to feel even comfortable thinking about it. But if we, you know, do start to, you know, establish a higher low, you know, say we doji tomorrow, just for an easy example, see some upward movement, take out that trend line, take out that swing high, maybe we could talk about that being a bullish signal. That's a lot of maybes. That's a lot of things that have to happen. And I don't really expect that to be easy to accomplish. I wouldn't be trying to take advantage of it, quite honestly. Still think you're waiting for some clarity here, whether it's on the break below 1280, which I would absolutely call a bearish signal, or the turnaround of the trend, right? And who knows when that, if that's the way we go, when exactly that's going to happen and what exactly it's going to look like. I do know we need to break some resistance before we can have that conversation. If you buy by my rules, at least, can't even talk about it until we take out that resistance level. So rough market, from a swing trading perspective, I think to be trading right now. From an intraday perspective, not so much, been pretty effective. Over in silver, we did close below 15, and I do think that is first step of a bearish signal. Now, I want to see continuation because that is a big price range, in my opinion, at least. So I do want to see it continue this going into tomorrow, not looking to trade the breakdown right out of the gate. Basically, if we do close below this 14 again tomorrow, I'll start to be very open to bearish swing setups in silver. A couple things need to happen first. I do think you have to call that at least a little bit bearish, finally giving out that 15 that's held for us all week. And we've, of course, got such a long history there that we have to probably respect. So metals continue to be volatile, more so to the downside. I mean, again, much like gold, we're making lower highs. This is a pretty ugly chart. If we cleanly break this 15, in my mind, that is a pretty bearish signal. I would certainly not want to be a bull, if nothing else, with that personally. Over in natural gas, we did see a little bit of downward movement off of the double doji that we've seen these last couple of days. Not terribly surprising, I don't think. We had more reasons to drop than go up, at least short term, with those moving averages, the old resistance, old support zone. Still, you guys know the drill. Support, we've got our swing support down here around 263, but then we've got 257, and then we got 250. Lots of levels of support to prop this up on the way down if that's where we go. I don't think it's a great trading environment still, and certainly not from the bearish side of things. We'll see where we find ourselves next week. Things can potentially develop, but from a bullish point of view, I think you got to get back into this range. And we've talked about this a couple times. If we're able to do that, we will be kind of taking out all of those short-term moving averages and resistance. So would be a little bit of a show of strength in my mind if we were able to do it. I'm not going to bet on it by any means at all. So, old resistance, kind of our primary level, very tight range. We went from being crazy volatile to being very tight range with major levels of support, which keep me from wanting to be a bear, and not breaking resistance, which keep me from being a bull. And so still waiting, but we'll get it one of these days. And that's why you take a couple minutes of your day to take a peek, because one of these days there will be a great setup. Will it work out? Only time will tell, but I would like to be the one who makes the call once we get there. And finally, a little bit of profit taking over in crude today. We know that in that 64 to 65 range, we do have a lot of history, and we've really spent the last couple of days just hanging around there. Nothing dramatic by any stretch of the imagination, giving us more reason to believe in this resistance. And so as we go into next week, a break above this resistance, I think, can be interpreted as another bullish signal if we don't want to pull back. You have to realize we really spent the last 4 days using the same general ballpark of intraday resistance. So push back above that, although I think a lot of oil traders would prefer a little bit of a pullback into either 62.50 or into the rising 20, somewhere between 62.50 and maybe even as low as 60, although I probably would like it to not retrace quite that much personally. We may not get it. So we can, I think, start thinking about, hey, if this does break resistance, would that be a signal I would be interested in trading, with really spending all week long using that same, and especially knowing the history there. We knew that was an area that at least could potentially kind of at least short-term derail the bulls. And I'm not terribly surprised. Still holding up nicely, though. I mean, you have to really, 3 days hanging out at resistance. It's easy to see for everyone to identify. And that's all we had. That's only $1 or a 1% drop. I mean, have to take your hats off to crude a little bit with the way it held up. But I do expect this to continue to be a little bit of resistance. Ideally, we're pulling back at least a little bit more, but we'll see if that's what we get as we get into next week. So that is where we find ourselves after a fairly uneventful day in the market. But don't tell that to gold, don't tell that to silver, don't tell that to healthcare, don't tell that to the industrial sector. There were certainly things that moved and moved nicely here today, I want to take a quick peek and just talk a little bit about entries on our trades. We were looking at 3M last night. I know Jimbo had a trade on it, so hats off to you there, my friend. So coming into yesterday, as I was hanging out with in a one-on-one meeting with somebody, we're kind of just going through daily routine, talking about it. We're looking at the industrial sector, seeing that hammer candlestick right at that old support zone, right? So we said, hey, let's go look at the industrial sector, and just like that, 3M was there to say hello, and I was happy because it's always nice when you don't have to dig deep to find anything. So I threw it out to the crew over on Twitter, and we kind of talked about it a little bit over there. So want to talk a little bit about how to get into these things, and more than how, because you guys know how, but I think what can be easy to forget is we have to be consistent. It's not that we don't know how to get into these things. It's that we don't have it can be difficult to have a very consistent definition for how you do that. So first thing, I think it's fair to say, there really, to me, there are two, directionally speaking, there are two really foundational patterns. There are breakouts and there are pullbacks. Not all of them look exactly the same, but at the end of the day, we're either buying when something breaks resistance, or buying when it pulls back to support, or selling when it breaks support, or buying when it gets back to resistance, right? That's really, to me, that's the only four things that we're working with, and everything is just a branch off of that, right? Whether it's a cup and handle, a triple top, head and shoulders, a descending triangle, everything is just a break, or a pullback, right? And that's, of course, pullback is what we had here on 3M. So first things first, I think it is fair to ask yourself, do you have different entry rules for breakouts versus retracements? And I think that's a fair question to ask yourself. For a break, I will unequivocally always, and probably forever, although you never know, say a close has to happen. It has to close above resistance or below support for confirmation. A close is a close is a close is a close, if you will. And that is, I do not deviate from that because I believe that it's hard to break support and resistance. And I believe it's a lot easier to stick our head up above or below it on the intraday than to hold that break. So for me, always and forever, again, I don't know the future, but I think always and forever, maybe a better way to put it, it has to close. Whereas a pullback is a little bit of a different type of a trade, isn't it? As opposed to a breakout, at least you could argue that we're basically betting on the trend holding, right? I mean, effectively, that's what we're doing. If we're looking at this pullback yesterday, we're saying, well, we're in an upward trend. Yeah, no one can deny that. You can believe that it's not going to continue, but you can't deny that that's what we're in, right? We're at an old resistance level, so a recent breakout point, right? Of course, yesterday we had that hammer candlestick. So the thought process is, well, if this trend continues, it's going to stop going down and start going back up, right? And so that's kind of the thought process there. I want to see 10% of an ATR continued the next day, Marcelo, to your question there. So a close plus 10% of an ATR on the bullish side, or minus 10% of an ATR on the bearish side, if that makes sense. So I want to see it continue that momentum. I want to see that follow through. And for me, I feel like that is just better confirmation. Now, it does lead me to, missing out on some things, but I don't really care about that. I don't think we should care about what we miss out on. I think we should care about what we get into. And that is the way I think about things. There's always going to be another trade set up, and I'm always going to miss something anyway, whether I realize it or not. So that's how I will look at it. I think from a retracement point of view, I think you could make a much stronger case, using kind of that above today's high. Whether it's 10% above today's high or whatever it is. Because basically, if you think about all retracement is all we're really doing is we're saying this 4-day downward trend that we've seen within the context of this longer term upward trend and clear upward overall momentum, this is just that, just a short-term intraday trend. We started going to the downside, and that's where we found ourselves, right? So basically, we're comparing this to that longer term trend, right? And I think it's fair to say, well, I think the long-term trend's going to win in the relatively near future. So I do think it's fair if we want to use the methodology of, well, let's get in, again, just a very general blanket statement, 10% of an ATR above that intraday high. But I also think it's more than fair to say it's a lot better confirmation to get that second close, right? And so obviously in the case of 3M, we should have, in hindsight, put our order 10% above an HR or whatever our actual rule is above yesterday's hammer candle, getting in here tomorrow, and we're happy, at least so far so good, right? Pretty happy with where we sit. And in this one isolated incident, that's that's true, right? And that's a perfectly legitimate way, in my opinion, to get into our pullback trades. 100%. I have no objection to that methodology, nor do I have any objection to let's let those traders get in. Let's get that close. And if that risk to reward is still there, we'll get into the next day. Do I run the risk of not being able to get in tomorrow? Absolutely. Sometimes, it goes quick, right? And that's the drawback. I don't think you want to look at it as a drawback, though. It clearly is. You have to pay for something, right? Whether more risk and less confirmation, or more of a risk to miss out, quote unquote, paying for more confirmation. And I think where most traders get into trouble, quite honestly, is they're inconsistent in how they do it. One day they get in aggressively, the next day they're getting in conservatively, not necessarily based off of anything, just kind of cause. And that's what concerns me, all the time, far more than what a person's individual trading rules are. I know there's lots of different ways for us to build our rules, and no two traders are exactly the same. What I do think we need to do, and what I think we can do, is have a consistent definition of what that will be. Now, there will be some times where, hey, I didn't get into it today. So don't be consistent in your consistency, Jimbo. So that's where we want to go into it. My advice is, you probably already have an idea, of what works better for you. Be consistent with it. Whatever it is, it probably makes sense, and if you wonder if it makes sense, reach out to one of us. We'll be happy to chat about it with you. But I do think that is where we get into the most trouble is, I don't know if I should get into this hammer this time, but it could just as easily be, of course I get into this hammer this time, right? And that's where we get into trouble. Well, I didn't. Well, now I feel like I missed out on it. So next time I'll be darned if I don't get in when I see that hammer. But next time is a whole new time, right? Still a little more aggressive, still a little less confirmation. And so maybe next time you get burned, and then, there we are getting into trouble. So try to be consistent in your approach. There is nothing wrong with either one of them, in my opinion. Perfectly legit. The one thing that I've learned over the years is we are afraid of missing out on things far more often than we actually have missed out on things if we apply that consistency. Just think of 3M, just like so many things in the market. We've been up, there've been plenty of times where, we would have not dared, at least when I say we, I mean me, I wouldn't have dared buy it here or there for whatever my reasons are. And that was just a me thing, right? Going into the trend, there's a reason they say the trend is your friend. So, but hey, sometimes, I want to be consistent. I really do. And I want you guys to be consistent. Even if it's a different rule than I have no problem with that. I just hope that everyone's consistent. Even if you are, though, hey, for some of us, we were, debating 3M last night, but maybe for some of us here, this is the first time we've looked at it, right? So we can't go back in time and use yesterday's candlestick as much as maybe we would like to. So of course, we can use that same general methodology, or this is the methodology if you're going to be more conservative and, hey, let's get that close, let's get that confirmation. Do I get fewer trades than an aggressive trader? Of course, there's always a trade-off. If there was one way to do it, that's all we talk about, right? And that was the only thing we'd focus on. So we can use that same methodology. Let's get in, whether, again, doesn't have to be 10% of an ATR, but it should be a clearly defined rule. If we get above that. And that's pretty straightforward, I think. And if we embrace it, I don't think it's hard for us to do that, quite honestly. I think where a little more, difficulty comes in is in the stop loss, because we have a little more flexibility, right? Do we expect this to hold? Yeah, I do. I don't know the future, and 3M may not, but I do expect, looking at this, if I see this chart pattern 100 times, I absolutely expect that it's going to go up more often than not. Right. And that's how we kind of have to think as traders. We can't put all that pressure on 3M or this one trade, because that's not fair or reasonable if we do that stuff. And I know sometimes we want to, and I've been as guilty as anybody of that in my day. So I certainly understand. But thinking about your stop, think about what you're paying for, right? It's very easy, and probably the first stop would be, this swing low. Now you could go into an intraday if you wanted to, and this can kind of help you lower that risk sometimes if there's something there, although I don't really believe there is something here today that's really strong for us. I guess maybe you could argue the hourly 9 EMA if you wanted to, but you'd probably need to be around to monitor that during market hours. So using today's low, or minus whatever your ATR rule is, would make perfect sense. But in this particular case, let's see if I can move this line here, to get below the actual swing low, what do I know for sure? I know with absolute 100% certainty when we hit that low yesterday, buyers stepped in and they stayed in, right? They ran it up off that low. They carried that momentum into today, closing very bullish here today, right? Very solid top to bottom type of a day for the stock. So that's a lot better support, in my opinion, at least, if it's not going to cost me a whole lot more. I can take it further. Would I rather use the 20-day simple moving average as my support zone? Of course. I want as much as humanly possible, but now it's starting to get a little bit more pricey, right? Would I like to use the 50-day moving average? Oh, you betcha. I would love to have my stop loss below the 50-day moving average, but that is going to cost me way too much, in my opinion. Doesn't mean I'm right or wrong, but yeah, just not getting enough bang for my buck here. So we want to kind of work into this. You'll see it a lot. You will see it a lot. It's a pretty common pattern, and I really like hammer candlesticks at support, or at trend lines. I think that is a very good short-term signal, personally, Jimbo. So we can kind of decide how we want to go about it. Same thing with managing. We got to give it some room, right? We for some reason we want to lock in profits quickly, but not be nearly as flexible with our stop losses. So whenever you're building your stop, think about a few different locations, price them out a little bit. What are you getting for that little extra room, or sometimes a lot of extra room, right? Sometimes it's very clear. Yeah, someone said their stop's below here on a swing trade. I would say you're risking way too much. Now, position trade, I wouldn't say that, but a swing trade, I would feel that way at least. But I think, we could make a much more interesting argument between today's low, our low point from yesterday, where we clearly saw buyers step back in, and since it's not that far away, that rising 20-day moving average either. So I hope that does give you some ideas as far as that goes. I know we talked a little bit about that on Twitter. So much of what we do can be done when the market's closed. And for a lot of us, pointing at myself, because I fit there, we do our best work when the market's not moving. Some of us just have a hard time, feeling like we're going to miss out on something, or we better hurry and lock in those profits because reason whatever, because on the 1-minute chart, it just broke below something, very, unreasonable things if you kind of think them through. But in real time, we're all capable of weird stuff, right? No doubt about it. So, so much of this can be done while the market is closed. I've worked with lots of people over the years that were traditional 9-to-5ers that's how they had to do it, whether they wanted to or not. So yeah, staring at an intraday chart will give you some gray hairs, Jimbo. At least it gave me some. I try to shy away from it personally, because I don't, I try to do everything tonight. Now we'll kind of use this. We kind of went through, I'm still interested in some things in the industrial sector. It doesn't specifically have to be 3M. Just wanted to use them as an example because some of us have been talking about them here. But we can kind of use that as the guide. I guess my point is, and again, for me, and I know there's lots of ways to do this, but for me, nothing's going to change tomorrow. Assuming I want to get into 3M and it breaks that 10% of an ATR and whatever I chose for my stop loss, I've got a swing high. I've got a target just shy of 120, which is 1 ATR. Past that swing high, don't dare go too much further because we've got 2 weeks until earnings. So I don't think we have a ton of time for a lot of our swing trades. Whatever I'm doing with it tomorrow, if I can stare at it, but that doesn't matter. Odds are me staring at it all day is more likely to lead to bad decision-making than positive decision-making, right? It carries that momentum. I get in, it does what it does. It'll either break support, whatever support I'm paying for, or it won't. It'll either run or it won't. And me being around looking at it is not going to impact it in any way, shape, or form. And I think for me, at least, that was when you say it out loud, it makes a lot of sense. But I know it's easier said than done. I know that was something that was really helpful for me is when I kind of got into that thought process, right? It doesn't need me. What am I going to do? Cheer for it. It's not the San Jose Sharks that maybe we can cheer for them and have a little impact. Certainly 3M is going to do what it wants to do with or without us. So I like to make the decision while the market's closed. I'm level-headed. I don't feel rushed. Thinking as clearly as I ever will be. There's not a penny on the line. And I think that's, where a lot of people make their best decisions. I know I certainly do. And so that's when I do. I know I'm much more trustworthy at 2:30 Mountain Time than 12:30 Mountain Time. So I hope that does give you some ideas, everybody. And specifically, Emily, I hope that does help give you some ideas going forward and kind of thinking about your day. Yeah, also, keep in mind, we go through the same quote unquote boring routine every day here in the market recap, right? We do it for a reason. It's our routine, right? We don't get too excited. Well, we can add stocks from our watch list into that routine as well, right? We can apply the same methodology into everything within our watch list. We've got a Union Pacific here, pulled back, sitting on a 50-day moving average right below a 9. Maybe I'd prefer this to a 3M. Right, it's got a nice top out here, not too far away from us. Potentially a cup and handle breakout. Maybe I'm not interested in this pullback because reasons, but I would be interested in a potential breakout, right? I can do a lot of this work, and then it's just a matter of, hey, we get there tomorrow or we don't. So you're very welcome, Emily. I hope it helped. Try that. Try to add, a couple of stocks in different areas into your version of the market recap, and it'll get easier and easier and easier. I like to think of everything as a story, and I only want to feel good about jumping in when I really feel like I know what's going to happen next. I never know, you never know, no one ever knows, right? But we can feel like we have a pretty good idea. So not anything quite as pretty tonight here. Exactly, Emily. Not anything quite as pretty tonight here in the as 3M was last night, but there are definitely some interesting things out there. You have CSX, not quite as pretty. You have LIN that not there yet, but I'm watching for it, right? And again, this guy's been great, strong, recently broke out. Not there today. For me, there's really no way that there's an entry tomorrow, and who knows if I'll ever get what I want. But if I pull back a little bit more, let that rising 20 catch up, pull back into this old resistance level, and then see that hammer candlestick, or maybe I see it tomorrow, right? It's kind of been pulling back with the overall material sector. These guys are in the material sector. So thinking a little bit about, it is right now. It is right now. So thinking a little bit about what we would want and why we would want it becomes really easy. Today, very easy. I'm done with Lynn. Tomorrow, maybe I'll have another red candle. Won't have to think anything about it. I'm looking, anything above this breakout point, I'm interested in. Maybe tomorrow is a doji. Maybe tomorrow's a huge green candle, and well, see you later, Lynn. We'll see you next time. So we can do a lot of the heavy lifting while we're just hanging out, right? Just think, going through our routine, going through our watch list, and it's a lot easier. I'm ready to at least make a decision on Lynn when and if that presents itself. Now, maybe it will, maybe it won't. Maybe that decision is not today, and whoops, I should have today, or whatever it might be. But it really can, I think, go a long way, especially if you like to kind of keep, the same general group of stocks that you're comfortable with, that in your watch list. Get in there and mark those charts up. Know what you want, why you want it. It's a lot easier. You don't have to spend a ton of time. We spent way too much time talking about Lynn today. We needed to spend just a second and say, nope, not today. Bears are still in firm control, but it's still in an uptrend, still making higher highs and higher lows, still above the breakout point. We'll see you tomorrow, right? So hopefully that gives you guys some ideas. I know I kept you longer than usual. I better let you get out of here so I can do some lunch. I've got a pretty exciting and busy evening, so I better let you get out of here today. But as always, you guys, it is my pleasure. Thank you so much for your time. It's always more fun to do this with you guys than on my own. And I do hope it gave you some ideas as far as managing your watch list and your time as well here today. If you haven't already, be sure to subscribe to the channel, hit that notification bell, join us over at Tackle Trading on Twitter. Come hang out with the rest of us. I'm at Frank Martin 23 on Twitter. If you're ever looking for me as well. Of course, it is always helpful and appreciated if you enjoy the market recap to give it a thumbs up. So thank you in advance for that. You're very welcome, everybody. As always, guys, thank you so much for your time. Enjoy the Cash Flow Club here this evening. I'll see you same time and channel here tomorrow afternoon. Thanks, everybody. So there you go, Jimbo. There you go. I'm going to turn this show into like an hour. I started with the goal of being done in 15 minutes, Jimbo. That quickly turned into 30, and now it's 30 is rare. 40 is where it is right now. So one thing you learn about traders, we have a hard time shutting up, right? So thanks a lot, you guys. You guys have a fantastic Thursday night, and I will see you tomorrow.